About all of this, we have with us Ankush Jain, the CFO at Dabur India, joining in the show right now. Ankush, hi, good morning. Wish you a very happy Diwali at the onset from all of us here at TT Now.
Yeah, thank you. Good morning, and wish you and your viewers also a very, very happy Diwali.
Thanks, Ankush. Ankush, help us understand, the one number that actually stands out is your volume growth of 10%. How did you manage to post volume growth at a time when most industry is facing such acute raw material cost pressure? They are undertaking price hikes. For you to be able to spin off a volume growth of 10% seems great.
Yeah, thanks for that. And I think we posted a spectacular volume growth of 10%. The business has delivered a strong growth of 12% in value terms, and that is also on the back of a very strong 13.7% growth in previous year, leading to a CAGR of 13%. And this has been pretty broad-based. So if I talk about foods was a stellar performance, 43% growth. Then HPC also on the back of good 12% growth, CAGR of 13%, 17% HPC growth. Healthcare, though there was some muted growth of decline of minus 4.8%, but that was also on a very strong high base of 50%. So yes, this growth was because of the teamwork, because of strong resilience in the brands, value-added products we have been launching, the new products we have been launching, and also most of the channels firing for us. There was on-ground strong execution, and coupled with the brand building and driving awareness, this led to a strong growth of 10%. Not only this strong growth, but it has been coupled with strong market share gains, at least in 95% of our portfolio where we operate. Just to give an example, Chyawanprash, where we are 60% plus market share, we gained 500 bps. Likewise, in honey, we gained 400 bps. Even in the challenger categories, whether hair oils or oral care, we continue to gain market share. So that means our strategy of power brands actually is working very fine, and we are quite proud of our functional and sales teams, and marketing teams, which has led to this spectacular growth of 10%, and driven by obviously strong leadership and strong execution. Hello.
Sure. The other thing I wanted to understand is, given that raw material cost pressures are continuing unabated, while for now you've managed to protect your margins and you have undertaken price hikes as well, what is the pricing strategy going forward? Because at one point in time, you'll either have to give up on your volumes or eat into your margins.
Yeah, that's an interesting question and debate we have been, grappling with. While this year there was a marginal contraction, this quarter there was a marginal contraction in margin, but it was much lesser compared to the peer benchmark. And even on a 2-year basis, we have almost maintained our margins despite this significant inflation. Now, this inflation is probably the biggest pain point as we see. Earlier, we thought it is more transient in nature when we discussed last time 3 months ago, but it is more structural as we speak. And it is setting up into bases, and most of the prices, I don't think so, will cool off before later part of the year. So coming back to your specific question on how do you now manage. So there is a 2 or 3 pronged strategy for that. We took almost 3.5%, 3.7% price increases on a weighted average in Q2. We are re-evaluating certain price increases more. Plus, as an organization, we have an advantage. We have a diversified portfolio. So there are healthcare products, there are HPC products, there are beverages products. So at a corporate level, if let's say it's difficult to take price increase in a particular category, but overall we take in certain other categories like healthcare, which are more price elastic, and hence we are also reworking on taking some more price increases in a calibrated manner. Having said that, we also embarked on a cost-saving initiative program last year. We are continuing on that. Last year, we had almost 50 crores of savings. This year, on an annualized basis, we see 75 crores, which will, to some extent, mitigate the price increases. But yes, it's a very, very fine balance. And this year we will have to cut it really fine in terms of balancing the volume and the margin protection. While the scale benefits will give us some leverage, and some of the price increases in cost savings will definitely give, and that will mitigate some part of it. And we are open to take our price increases even more, and we are working on that.
What are the chances that some of your so-called immunity booster portfolio, whether it is Ayurvedic or Chyawanprash, which saw an uptick because of COVID, their sales could normalize and that could be a dampener for you in coming quarters?
In fact, Chyawanprash and some of the immunity-based products, if you compare them from last year basis, you will not probably get a right perspective. But if you compare it from last to last year basis, what trends we have been seeing, as an example, Chyawanprash, which was around 3 to 4%, category penetration levels pre-COVID, it jumped to almost 8% last year, almost doubled, and it has almost stabilized at that level even the current year. Likewise for honey, the category penetration increased from 20% to 24%, almost stabilizing that at that level. We will definitely not see those levels of growth, which was 60 to 70%. There would be some marginal correction, but on a 2-year basis, it would definitely be growing on a CAGR basis. Likewise, I think another positive trend is that people, even the younger generation, are now looking for more immunity-based products. So the levels of awareness, the levels of trials have actually increased. And to add on that, we are also extending our portfolio and adding also into adjacent categories. For example, Chyawanprash, we recently launched Chyawanprash tablets, more convenient form. Likewise, we launched Chyawanprash pouch packs, which is more smaller pack, and will drive trials going forward. Likewise in honey, while we've also launched pasties and entering into a bigger segment, which will also overlap with let's say jams category. So therefore we want to enter into the breakfast table as well. So while there would be moderation in growth, there would be maybe in this quarter, because we are sitting on a very, very high base, as you rightly said, for immunity-based products, there may be some marginal, hump, and we will have to navigate it. But I think we have right to win in the categories we are launching, and we are expanding it to the newer formats, to the newer, convenient packs and so on. And also, special immunity-based products like Giloy or single herbs, at least we are much better placed than last year. The awareness levels have increased. Younger people are consuming it, they are driving it, though the growth will moderate for sure in this category. Yeah.
All right. Thank you so much, Mr. Jain, for joining in, and wish you and your team a very, very happy Diwali from all of us here at ET Now. Thanks so much for the perspective that you just gave us.